If you're a CEO, CFO, investor, or lender, or in my case, a banker, and you're doing deals in Africa, there's definitely something on the agenda this week that's definitely interesting to attend. So on Friday, Bowman's is hosting the 14th Annual Africa Competition Law Conference, and this really convenes regulators, practitioners, and market participants around the theme that captures really the moment currently about championing Africa opportunities amidst uncertainty. And what I wanted to just briefly share, and I'll give a breakdown afterwards as well, but really why this matters. Competition law is no longer a sign of a sign off at the end of the deal, but it becomes the front end strategic variable, shaping what you can buy, how fast you can close, and what conditions you must accept, and how you underwrite growth, specifically across borders. And this year's agenda of the conference, at least what they frame publicly, puts really three pressure points out there. So it touches on navigating regulatory complexity in merger review, enforcement of priorities in key sectors across the continent, and then also talking about is big bad. So the debate on Africa, Africa champions, and then scale. And of course, this is not academic. I think those 3 points map directly to real questions that deal makers are wrestling with right now. If we look at what's happening in private equity, what's happening in mergers and acquisitions, and of course, just companies growing, how do we close cross-border transactions without uh, death by filing? How do we invest in regulated and politically sensitive sectors without remedies blowing up the model? And when does scale become a virtue versus a competitive risk? Now, just briefly, if we look at the regulatory complexity, the market reality is that more deals are cross-border, multi-jurisdictional, and increasingly scrutinized. And one of the moderators already flagged that a practical point to consider is M&A is often cross-border, and the real value is hearing directly from regulators about how friction about this friction and how to navigate this. So for funders and deal makers, I think the changes in the mechanisms, focusing on the timelines, competition approval is not a single date anymore. It's a process risk built into your critical path and your long stop dates. Economics matter. Delay has a price. Break fees effect. Ticketing fees, hedging carries, commitment fees, and of course also integration risk. And then documentation, your conditions precedent, your CPs, um, uh, reverse break fees, cooperation covenants suddenly matter a lot more. So from a practical perspective, we need to treat competition clearance like you treat financing. You pre-underwrite it, your scenario test it, and you actively manage the stakeholders. I think another big idea is that's coming through is public interest. And this dimension is really shaping, and specifically from a South African context, the formal direction of travel is quite clear. The competition assessment and public interest assessment are equal in status in merger control, and this matters because it widens what approval can require, often into areas that look like industrial policy, jobs, ownership structures, local procurement, and development outcomes. So for business and investors, the question is, can you design your deal narrative early so that remedies don't get imposed on you, but it's really shaped with you. So this is where sophisticated deal making is heading. You can't wait for those conditions. You build it, and you have a credible public interest strategy, employing pre-tech protective logic, supply development, localization where it's sensible, capability building, and measurable commitments that don't destroy the investment case. So really, you align the deal to the broader policy environment without turning the transaction into obviously a blank check. Um, Again, a recurring theme in many of these items is digital platforms and digital markets. So year two across Africa, regulators have become more confident and more coordinated, and digital enforcement is a defining theme. I think some recent commentary highlighted that digital platform regulations, big tech scrutiny, and remedies that look increasingly structural or behavioral in nature. So for deal makers, this really presents itself in two ways. If you're investing in platforms, fintech, marketplaces, data-driven businesses, your market definition and your dominance analysis becomes a core investment risk, especially where data access, interoperability, and self uh, preferencing allegations can derail your deal. And then, of course, if you're a traditional business going digital, acquisition of tech capabilities, so payments, logistics, data, customer platforms, etc., may also attract scrutiny if it's targeted, if the targets look small, because authorities care about gatekeeping effects and future market structures. So the conference, I think the digital threat is explicitly or implicitly is really a warning. So digital scale and network effects can turn normal growth stories into a regulatory story. And then, of course, Africa at scale, the African champion. And this is something I've also been speaking about often. And this is the question is big bad. And I think what we're going to look at on Friday is the conference really frames this as an argument for African champions, firms that can achieve economic scale in regional markets and compete globally. And this is really where the strategic tension has been for decades. Africa needs to scale to compete, industrialize and build resilient supply chains, but scale can also entrench market powers, raise barriers of entry, and reduce consumer welfare. So for business, for funders, the implication is, I think, again, very practical. Is your deal thesis dependent on consolidation? And then you must be able to answer why this combination improves productivity and competitiveness. It's not just pricing power. How you preserve contestability entry, innovation, supplier access, and what you remedy postures if regulations demand commitment. So again, Africa Champions isn't only a policy conversation, it's really an increasingly deal approval variable. So I'm looking forward to Friday's conference again, where we're going to explore, we'll learn about more about this, and you can see the reason that I'm very interested in attending this as someone active on the continent, but also as a financier. So if you're attending, whether in person or online, what I'd be listening for specifically as a business leader, fund or advisor, is what changes in merger review timelines across key jurisdictions are, and what regulators expect in pre-notifications, which sectors are top of the enforcement agenda, and what then that implies, and how public interest remedies are evolving, and which commitments are becoming standards. Of course, also then how market scrutiny is being applied in the digital realm, especially around data platforms and market inquiries, and then whether the Africa champion narrative is gaining regulatory acceptance, and what the guardrails are. So I think 2026 competition law is not only about compliance, it's about the speed of execution, certainty of closure, and the shape of your growth. So again, looking forward to seeing what Friday's conference holds, and I'll whatever I can share post the conference. I'll make another short post and share some key learnings.